Hi there, my name is Jamie and welcome to another episode of Quick Market Talk with Experts. Today, we've got a quick market talk with Joey, a top-tier remisier and SGX Academy trainer with us once again. We previously chatted with Joey on the 2nd of August, where he shared his bullish view on Yangzijiang shipbuilding. We're about to find out how Yangzijiang has performed since, and whether he has got other new stocks on his short-term trading radar. So grab your cup of coffee and listen in to our conversation. Hi, Joey.
Hi, Jamie. Thanks for having me here. Hello.
No problem. Joey, good to have you back with us for a fourth episode. 1.5 months ago, on the 2nd of August, you mentioned your bullish view on Yangzijiang shipbuilding stock listed on the SGX. Specifically, you mentioned that the stock was looking attractive as long as it was supported above $1.45, and that if it broke above $1.55, you were looking at an upside target of $1.70. 2 days after our episode went live, Yangzijiang shipbuilding shares moved above $1.55 to close at $1.57 on the 4th of August. And then on the 10th of August, it touched $1.70, the target level that you had mentioned on the episode. Looking at the Yangzijiang warrant that we mentioned on the episode, RLWW, it would have gained 30.8% from 1.3 cents to 1.7 cents during this period, whilst Yangzijiang shares gained 7.6%. In this case, the call warrant moved in a larger percentage than the shares due to the gearing effect, whilst only costing a fraction of the share price. One of the reasons why you could have considered trading your view using a call warrant, Joey. Now that the shares have hit your initial target level, Joey, do you have a refreshed view on Yangzijiang shares?
Yes, I do. Thanks, Jamie. Let me go ahead to share my screen as we look at Yangzijiang again. So good to hear that the warrants have performed really well, more than 30% compared to the underlying of only more than 7%. All right, so let's see where we are right now. So in the previous call, we were somewhere around here, just below the 155 to 160 resistance level. So good that we managed to break this resistance. In fact, we have broken the 160 resistance level as well, and we hit it all the way to past our target at 170. In fact, we hit it to like $1.80, and that was where some selling or some profit taking actually came back, which is good. I mean, the thing is that we want to see some consolidation or some sideways movement before a stock moves up and up and up. It can be quite dangerous if it does that. So right now we are seeing some sideways consolidation at a higher level. So if you can see, right, JB, you can see that this $1.55 or 160 resistance level that we talked about last month, now it has become what we call a support level. In fact, over the past 2 weeks, we hit it there and we have rebounded from it again. All right, and now we are at about 1.68. So my view is that I think for Yangzijiang, we have already came higher, we have pushed a little bit higher, even though it's slightly higher. My view is that it could still be more bullish. It could still be more bullish after this sideways consolidation that we are seeing right now. So you can see that in terms of the longer term trend, which I talked about in the previous session as well, you can see that the longer term trend is still up. In terms of the longer term moving averages, they're all pointing up, right? The prices are above it. So pretty strong uptrend, just that in the short term, as I say, we are seeing a bit of sideways movement, which is good because it can give us an opportunity to time our entry again back at the support level, which has been holding over the past 1 month or so. So where's the support? Well, this support, as I say, is about $1.60. So let's say I could draw some, upside targets from 160 all the way past 170 to $1.80. So 180 would now be this target or this short-term resistance level that we might see selling again. But if that gives way, just like what happened for the 160 a month back, all right, if that gives way, well, we could potentially raise our targets higher all the way from 180 to maybe even that $2, right? That could be kind of the upside after that 180, right? So yeah, so far so good. I think Yangzijiang looks quite good. Anything on dips, maybe you can use warrants as well. If it does dip to, in terms of the underlying stock price near 160 or 165, that could be a position for the warrants as well to ride the rebound and a potential break of 180 as well.
Great. So, well, looking forward to you using warrants to trade this view. And then hopefully in our next episode, we can see how you would have fared using the warrants. Now, Joey, given that you have formulated your refreshed view on Yangzijiang shipbuilding, are there any shares that are listed on the SGX have recently captured your attention as well?
Yes, there are a few stocks that have came with our watch list, and these are stocks which I get asked quite often on. So let me just share with you one of those stocks that is pretty popular. Let me just share. I think that would be Keppel Corp, Keppel, Keppel Corp, one of those blue chips in the Singapore market that we get asked quite often on. And you can see that for Keppel Corp, we are currently trading at about $6.85. So it seems like we have found a higher support level, right? Just about a month back, we were trading at about 660, but that support has came a little bit higher, around 675 to 680. So that's a sign of strength of the short term, right? Buyers are starting to come back to, defend the stock at higher prices. They're willing to buy at higher prices, and that's a good sign of at least some strength, right? So that would be the short term. In terms of the longer term trend, this has been a pretty good uptrending stock since last year. In fact, you can see that we have been forming what we call higher lows. Look at this right here: higher lows, higher lows, higher lows since last year. In fact, and the upside actually accelerated somewhere in March 2023, just a few months back, and it really shot up all the way to $7.50. So pretty strong longer term uptrend. Just that in the short term, it's normal that we see some short-term selling pressure. It might pull back a little bit, and then buyers come back and it starts to rebound back up, right? So that's what's happening right now. So what happens is that in the short term, as I mentioned, we have found some support around that $6.75 to $6.80. So right over here, over the past 3 weeks to a month, all right, 675 to 680, it seems like buyers are slowly coming back near here, all right, and defending the level, all right, all the way to maybe a little bit of a resistance, a psychological resistance, if we call it, right? That would be around that $7, right? This $7 is what we call psychological resistance level. So we might just be in this range from maybe $6.75 to $7. It might consolidate a little bit more. And what we want to watch is that if we do break this $7 psychological resistance level, well, great. I think that is where potentially we can see the reversal happen. All right. And this short-term 20 days moving average will start to slope up to lead that reversal. So this is one of the stocks in our watch list. It's pretty much moving sideways. The longer term uptrend is intact, and we could really see the move hopefully in the next 1 or 2 weeks or next 1 or 2 months. If we do break the $7, that will give us more confirmation on the upside.
Now, Joey, if it were to break above $7, will we be looking at around $7.40 as an upside?
Good question. So I would say that if it breaks the 7, then we can potentially head towards the next resistance level. And where would that be? Well, that would be at this level that we have headed to somewhere in August. In fact, early of August, we headed to a high of around 746, right? So just to give it a bit of allowance, 746 is around to $7.50, and 750 would also be what we call a psychological level. Right over here, right near 750, about more than a 6 to 7% upside. If we break that $7, we could potentially hit to 750.
Okay. Now, shall we take a look at how a warrant would perform based on your view then?
Yeah, definitely. I'm like curious as well to see, how, let's assume that we get in somewhere near like current price, and assuming we break that $7, we hit to 750. What could be the potential gain? I mean, hopefully it's like more than 30%, like what we saw for Yangzijiang. I mean, let's see how it plays out.
Now, in order to see how the warrant will perform, you can again use the warrant selector tool, which by now you should be familiar with, Joey, and that's found under the warrant tools drop-down, warrant selector. You put in the Keppel Corp underlying, and because we were bullish, we'll choose the call. And obviously, if you're bearish, you choose the put. Now, the last price as of 19th of September, 10:50 a.m. is obviously at 686, not quite at the $7 level that we're looking for a confirmation on the uptrend. But if you were to get in now, and we were to put in a target level of $7.50, which is a 10% return from here, you would see that the warrant, in this case VBEW with a fire logo, would in 2 weeks generate a return of around 40%, whilst in a week from now, it would generate 43.3%. And if you were to keep going higher, the longer your holding period and the longer Keppel Corp takes to hit close to 10% above where the current levels are, you'll find that the percentage gains are dropping. Okay, it's now 36.7% instead. And why is that? The reason is because of the time decay effect or the holding cost of the warrants kicking in. Now, generally with any listed leverage products, the longer you hold on to the warrant, the more you have to pay in terms of holding cost. And in the case of warrants, it is reflected in time decay, which erodes the gains on the warrant. Okay, and so therefore, a week from now, you see that the percentage gains are around 43.3% for the first warrant. For the second warrant, it is higher at 77.3%. Whilst at a lower price of 3.9 cents compared to 8.6 cents in this first warrant. But with time, both will generate a lower return. And the purpose of using the Selector tool is to keep increasing the number of weeks to ascertain kind of the maximum holding period you would have on these warrants before the time decay erodes the percentage gains caused by gearing on the warrants. So as example here, you now notice the second warrant, whilst it generates a higher return, within a week, by the 10th week, this warrant will now generate a 4.5% loss, even if Keppel Corp shares were to be 9.3% higher from today, whilst the first warrant will still generate a 21.7% loss. So if you were considering this second warrant MPQW, what this tool tells you is that the maximum holding period on this warrant should be around 9 weeks only, or perhaps 8 weeks, so that it continues to generate geared returns or higher returns compared to the stock. But beyond the 8th week, if you were to hold it all the way to the 10th week, it will start losing you money. So your maximum view on this warrant, the second warrant MPQW, needs to be 9 weeks at most, and ideally 8 weeks. Okay, for the first warrant here, you will see that if you held it 10 weeks from now and Keppel Corp took 10 weeks to reach $7.50, it will still generate a 21.7% return. But of course, any shorter period of time, this second warrant looks like a better one. So it's really up to you which you would prefer, depending on your view, Joey. So coming back to Keppel Corp, would you have a approximate, kind of trading period or potential catalyst on the stock that you're looking at for the stock to reach your target levels? Or is it
Good
purely
question.
technical and, what kind of holding period typically are you looking at for such a view?
Okay, sure. Let me just plot the chart. We can kind of like predict where we could potentially hit the target in terms of like the consolidation or the previous consolidation phase, right? So as you can see for Keppel Corp, right, over the past 1 over year, we have seen a couple of what we call consolidation before it actually breaks a little bit of a resistance and it pushes higher. So we can use this consolidation to kind of gauge pretty much how would we consolidate in terms of the time period currently, right? So you can see that since last year, maybe somewhere around here, we consolidated for like about a month plus. You can see we started to break the resistance, we push up, and then we got another consolidation right over here. This would be about 2 months, right? 1 month plus 2 months. And we got a little bit of a consolidation that's a little bit more volatile. All right. So right now it has only been about, I would say, 3 weeks, about 3 weeks. So if you just give a little bit of a allowance to look at the past consolidation time frame, all right, would be about a month plus, maximum 2 months. So if that happens, maybe in a few more weeks, if of course nobody can predict when exactly it will break 7, but the key here is that just a 2 days back, we actually attempted, look at this right here, this was on the 15th of September, all right, 15th of September, we actually attempted to break that resistance level. We went to a high of about 7.05, and in fact we closed at 7.01, right? But of course it did not follow through the next day. The market was a little bit weaker and sellers came back, and we are back to the consolidation phase. But at least we actually attempted to break it. So yeah, I might see hopefully in the next 1 or 2 weeks, if that happens again, we stay above $7, we close above it, and we actually attempt to push away from that new $7 support after breaking above. Well, that could be more confirmation, right, in terms of the upside reversal actually happening.
Right, Joey. So it looks like we could potentially have another week or another month to go before it hits above $7. And one thing to note is that with warrants, if you expect the market to be consolidating or just trading sideways, you generally would not enter into position until you expect the volatility to come in. So the demonstration earlier I had using the Selector tool was obviously based on your entry level now, but you could of course wait until it breaks above the $7 before entering, and potentially then you could be looking at better returns, as you wouldn't be holding from now until the time happens and incurring time decay or holding costs. Joey, is there another underlying that you are interested in? You were mentioning SIA shares?
Yeah, SIA, one of those stocks that came into our watch list. Let me just share my screen and let's take a look at SIA. Right, so SIA, Singapore Airlines, one of those really popular stocks that I get asked quite often as well. And for SIA, essentially, we have seen a really good move since May, June. Right, we shot up from like about $6, right? $6 all the way up to about $8, more than 33%. And then, selling came back. And since like July, we have been trading lower and lower. So I get asked quite often, like, is it a good time to get in again? It's like much cheaper compared to like 8 and 7.50. Right now, it's only like $6.72. So where could potentially be the levels that we could think about potentially getting in, or if we do see some stability or at least some support coming back, or at least some signs of the trend reversal from like a bit of a short-term downtrend to a short-term uptrend. So what do we want to look out for? Well, we can take a look at this level right here. I think the $6.50 resistance level right over here. 6.50 was the level where we broke in somewhere in May, went all the way up to $8. So this 6.50 could potentially be what we call a resistance turn support level right over here, $6.50. So we are kind of like heading towards this level gradually. And however, this short-term trend, you can see that it is still pointing down. It's still pointing down. Why? Why do I say that? Well, you can see that this short-term trend, we look at what we call the 20 days moving average. So this 20 days moving average is the green line right here. You can see that when we broke that $6 level, this green line was sloping up, all the way until we hit the peak of $8. And this green line, you can see it started to flatten out and slope down. And right now, this 20 days moving average green line is still sloping down. So short-term wise, we can still see some weakness. So why am I looking at this stock? Well, because as I say, if we do hit to this 650 support level, that could potentially be where we might find some good bargain hunting coming back again. And hopefully by then, this green line that is still sloping down would potentially start to flatten out and start to point up. So like what we saw over here, somewhere in April 2023, you can see right over here, it was pointing down and then flattened out, and then you can see we started to slope up aggressively. That was where the reversal move actually happened. Right. So right now, if this green line 20 days moving average is to slope down, and we hit to like maybe 650, 660 around there, you see a bit of support coming back, and the 20 days moving average start to slope or reverse back up. That could give us a sign to ride the upside all the way from 650, 660, maybe all the way back to that $7.10. So 7.10 would be what we call the resistance level, because we have broken, was the support level. You can see when we broke it now, we are pretty much making our way down, right? But that could be one of the stocks in our watch list to potentially get in to catch the reversal when the time is right.
Right. And if you were to consider using the warrants once again to trade your view on SIA shares, I mean, of course, you've got the warrant selector tool, which you can repeat the same process of, looking for SIA shares and clicking on a call and inputting, your target level of $7 and looking at how the warrant, in this case, there's only one here, would perform with time and the maximum holding period. But another tool you could consider using, Joey, is what we call the calculator. The calculator tool tells you where exactly the warrant should be bidding at based on the underlying price on a specific date. So in this case, we've chosen this SIA warrant that showed up in the Selector tool, NVYW. If you scroll lower, today, as of 11:05 a.m. on the 19th of September, is trading around $6.64. But I think the support level you were talking about, Joey, was around $6.50. So if we wanted to know what the warrant price will be today when the stock is trading around 650, we will see on this tool that it would be 2 cents on the bid. But what if it only went there, say, 2 weeks later or a week later? In this case, we could move the date slider to a week from now on the 26th of September, and you see that the warrant price will fall because of time decay setting in to 1.9 cents on the bid. And so the approximate offer price that you could look to buy this warrant at would be one tick higher at 2 cents, right? So that could be your entry level. And this tool is great for estimating what, the warrant price would be with time at a, specific underlying price. So if you, let's say SIA went only to $6.50, which is your support level, and you decide to get in via this warrant, you can again use this same calculator tool to do what is similar to what you can achieve on the warrant selector tool. You can put in the $7 price, and you can increase the number of the date to increase by the number of days, whatever days you're looking at, let's say a month from now, on the 19th of October, you would then see that the warrant price would go up from 2 cents, which was the offer we said that we could buy the warrant at. So this tool is great for simulating what the warrant price will be based on what the target underlying level is on very specific dates, whereas the selector tool tells you by the number of weeks. But of course, what is worth noting is in both instances, this warrant can make you, geared returns of 26% versus a 5% return in the stock. But of course, if you got your view wrong, if SIA shares were to come down 5% from here instead, you can see magnified losses as well. Joey, I hope today's session was informative for you. Thank you very much for your knowledge sharing on stocks. And again, looking forward to the next Quick Market Talk with Joey video to see how your stock views pan out. And hopefully it will be another winning idea, just like Yangzijiang shares have been. Thank you, Joey.
Thank you.
Till next time.
Yeah,
Bye.
thank you. Bye-bye.
Those who are keen to continue to follow on these Quick Market Talk video series with Joey and receive notifications on them, you may wish to subscribe to our social media channels of Telegram and Facebook, as well as YouTube.